I was here first, and try to claim the White House like what a child would do. I got here first. I got here first. Right? I called dibs. Man, this is where we're at. I can't believe we're even having this conversation. And I'm just generally curious at this stage, like who is with this guy? I mean, I I know there's a bunch of whacked out people, who follow this dude, but you're so insane at this point. You got to be losing people. I hope some, just sane people stand up and you would say, be like, yo, we gotta put a stop to this. Seriously, isn't this just stuff crazy? It's not like on a daily basis. Also, give you an update from the Iran point of view. They're just like, you know what? We're gonna go ahead and put a toll on the Hormuz Strait, which I understand their point of view. They're just like, hey, we need to get some reparations for the war. It's on our borders. And so now what they're saying is from Bloomberg, it says Iran is now preparing to pass a law introducing a toll, which will require any ship wanting to pass to share detailed information and hand over fees. And the thing is, before this war, right, ships are just passing through. We're all doing business and things are going on like they were. And then Trump comes in and is like, hey, you know what? I got to make things worse. It's like I feel like every day, wait, Trump waits was like, you know what? I got to make things worse. So right, it is so crazy. This is a meme that's been going around. Actually, my wife said it was on Korean social media also. Basically, Trump's when he talks about negotiation, he's just negotiating with himself, right? And then this is the kind of stuff that we're getting as well. There's a bunch of leaks coming out these days, guys. This one is there's a plan sitting on Trump's desk about how to get the uranium. And long story short, it'll be extremely difficult mission, extremely dangerous mission, and I just don't see, in just my humble opinion, that this would have much chance of success. But this is coming from the Wall Street Journal. They're letting you know what's going on. Trump weighs military operation to extract Iran uranium. And kind of my first reaction to this would be like, okay, Trump just tweeted out just a few minutes ago, I just read it to you, that if you don't, open up the strait and do what I say, we're going to blow everything up. And I'm thinking that maybe when this plan was put on the table, maybe, people in the military are like, hey, you put boots on the ground, which is terrible. Because people are going to know this. Like, I know you know it. I'm sure people in the military give him assessments of like casually, what it's going to be. And then his advisor would be like talking about politics of that, if these people get killed, this will be where your rating will be. People will talk about this stuff, right? I mean, these are actually serious things. And when you like go through these things, basically, they'd have to fly in under fire, which that would pose a danger. You got missiles, you got drones, right? RPGs, this kind of stuff. Then you get on the ground, and you're trying to look for these camp.
My mic on? Oh, okay, cool. Oh, wow. Now we got Carter again as champ. I was still gonna quit. Get that quick. I do all that dumb shit. Oh, yeah, that works. I'll get rid of that. And I'll put that down. Black. Get you one. Take you one, bruh. Another one bites the dust.
Sure, let's go live as soon as possible. Oh yes, guys. Welcome to another episode. As you can see right now, we do have a very interesting situation on the chart. Bitcoin is right at support. Bitcoin is right at support. This is very important, monumental support for Bitcoin, especially now that we are in a midterm year. And if we look at performance by year and then we'll look at the previous midterm years, you see that this is normally where we see the next leg down. If we take the average of the midterm years, the white line right here, we're right on the brink of another leg down. So this support is basically what's separating Bitcoin from that leg. Let me put it in a nice straight way like this. And so should we break it? You see our target, the first target would be here, the 200-week moving average at approximately 60K. And then should we break that down, yeah, lower towards 50 and 45 and so on and so forth. But guys, we have to look at what's happening right now because it is getting quite insane. You do have Pentagon preparing for invasion, basically. This is going to be very interesting to see as the outcome is not really clear exactly how it's going to be, how long it's going to be, but Polymarket predicts with 70% certainty that we will have U.S. forces entering Iran by April the 30th. Okay, super important. And by December 31st, it is almost 80% certainty. If you look at the basic markets online, there are stories, you probably have seen them, but they're different of military personnel in the U.S.
Were they free?
Letters that
they free.
They
free, dog.
Motivational letter that it's time to go to war. Quite crazy stuff. And if you are in the US, if you are in the military, please confirm whether this is going out, but likely it's going out because this is from everywhere, and I haven't seen anyone debunk it. Basically, American Marines are being told to prepare for combat. Prepare your family. They're trying to be a bit motivational here. I ask you directly: are you ready to deploy, fight, and win? Are you? Are your skills sharp? Are your standards high? And you're here prepared. Oh my, yeah.
quite insane. So listen, if you are in the US, let us know exactly what's happening. If you have any connection to the military, this is gonna impact everything in the market. I'll soon explain to why. Looking for sale of this. Even if you are a celebrity, Sydney Sweeney, her brother is coming to Iran. Okay, he's gonna be drafted. She says, and yeah, they're taking him to Iran to take the island or maybe even the mainland. All of this is unfolding quite quick. You have now the ceasefire percentage, also uh, quite a good percentage of ceasefire, 30% ceasefire in April. Let's see. I mean, it's way lower. But the biggest likelihood is that before the end of the year, there's some kind of ceasefire. Let's see how it's going to be. What we care about, guys, is the Fed. The Fed decision and whether the Fed is going to lower or not lower. If the Fed does not lower, we'll have a big problem in the stock market and in the crypto market. Currently, there is no change for April 29. So the main decision is in April, and the current number one scenario is that there will be no change. Let's check June. In June, you also have number one scenario being no change. And then July, the number one scenario is also no change. So until the end of the year, there is a good possibility that there will be no rate cuts. Okay. Why are rate cuts so important? Because if you look at our heat map, let's actually bring it up here, and we show the macro heat map like this. We need this heat map to go green for us to have a parabolic bull market with all season and like we had here in 2021, we need the heat map to be super green. Okay. Now we're still in the yellow, so it is becoming a bit better with the Fed expanding the balance sheet slightly versus how it was before. We still have had a few rate cuts since this red times right here, but for us to go to green, we need more. We need way more. And the time here from yellow to green can be approximately a year. Okay, so hopefully later this year we will see rate cuts. It's super important, and this thing will continue to move to the green. But at the same time, it will also continue moving to the green in case that it increases the balance sheet. Basically, they start deploying money into the market and starting to support the bond market or other markets. I mean, in Corona, they even discussed buying individual stock. Let's see if we will return to that. It will all depend how the economic conditions are going to evolve with the war. Okay. If you think about the bullishness, not bearish things with the war, but the only thing is that it will create a way for the Fed to go absolutely local with the printing. Okay, that's the only bullish thing. And they will have to do it. Then everything is funded. You need to fund the invention, you need to fund the initiative here. And if we look at the oil price, this thing is over 100, guys. We've been saying for the past 3 to 4 weeks that as soon as it gets over 200, it's gonna pump. It did that. Now it is around 100. It's not going down. Trump is trying to push it down. He's trying to unsanction the Iranian oil. He's trying to unsanction the Russian oil. But the Russia even said that they will not export gas, in particular gas, with the Russian case. U.S. themselves are saying that they will have a tariff for energy exports. And so let's see how this will evolve. But countries are protecting themselves. If you have oil, you have oil production, you have gas production, you have to protect yourself, number one. Let's see how this will unfold. But this is the most important chart. With the war, oil is the most important chart. As long as this is going up, we are not pumping. In the stock market, it's going to be very tough to pump. And the only thing that could change that with oil being high is potentially if you have rate cuts, but they are not coming. With this kind of chart, and without anything really breaking in a big way, rate cuts are not coming. Rate cuts will come if the chart is like this, and they really have to fix something. Maybe a lot of bankruptcies, maybe some kind of systemic shock to the financial system. There needs to be some kind of big bad news, and not to be super bad, super bullish. Big bad news, you cannot see it as bearish because that would trigger the Fed to start acting. So let's see what that is. It can be some bank collapsing, can be something. I mean, you know, the crypto bottomed on FTX collapse in the last bear market. So for stocks, it needs to be something similar. Something needs to break for them to really start acting. Something needs to force their hand. Now, the stock market itself can force the Fed hand, if it drops far enough, let's say it goes to 100 week, probably gonna step in here in some way. If it goes to 200 week, even more so. But the stock market now is a falling knife. It's a falling knife, and it's falling very, very quickly. It is losing the 50-week moving average. Okay. And now, if you look at the futures, it's a bit of a green, but you know the classic. You break down, you test, and then you continue down. So wouldn't surprise me at all if the stock market does something like that. So that's how S&P looks like. And as you know, we have the moving averages as our target. The trend is bearish. When the trend is bearish, you have to be careful. Nasdaq, you have similar situation. Trend bear, breaking down, losing 50-week, and going towards the 100-week. Let's see what's happening with gold. Looking at precious metal, gold is really in a position where likely is going to continue down, because if we compare it to 2022, which is the year of war, of midterm as well. Let's see, if I go to, let me just look at 2022 like so. 2022 was not a good year, and today is also not a good year for gold, although gold has fallen so much. It's quite insane how much it has fallen in 2026. Could reverse to the mean easily. Could easily reverse to the mean. Let's see if it can. If it's gonna get back to the mean. If you look at all of the midterm years, it is a bit of a similar picture there as well. If you look at the average, yeah, it still has. It has some really rally. Definitely really rally. Maybe 5% up, can easily do that. But overall, most midterm years, as you can see, it's actually all of them. They point down. They point down, and that's why gold is really not a bullish scenario for us. And we have been saying that basically since end of January. You can go to Bullman and Compass Ivan. You can see the tweets for yourself. It's time to wrap up the gold trade, which has been great for us. The bull channel has been very, very fantastic for gold. But this is not the year of gold. Absolutely not. It is mainly the year of the dollar. Believe it or not, it's the year of the dollar. Because it's not stock. Stocks don't do well in midterm. Gold doesn't do well in midterm. Crypto does not do well in midterm. It is the year of the dollar. And this is what's weird for many people. They see dollar as dirt. And listen, long term it is dirt. Long term it goes to zero. But it is a mistake to ignore the years where it is the year of the dollar. And what most people do when rates go up, when you look at the yields, for example, yields have been coming up a bit. And this is market yield. This is not the Fed rate. This is the market yield. But the market yield directly affects how much you get in the money market funds. And so when it is the year of the dollar, traditionally, the best option is to park cash in a money market fund that pays you these yields between 3 and 5% currently for the US. And then you look for the next big opportunities. The only caveat to that with the year of the dollar is that dollar is run by politicians. It's the US. It's the best option when you look at all fiats. There is no better fiat. You could potentially say Switzerland, maybe Singapore, but overall, when you look at big economies and what people put their money into, it is like dollar, maybe Swiss franc. But still, it's run by humans, which means that there is a potential for some kind of catastrophe. Maybe they go heavy printing. Maybe they do something else that is foreign. Still the human factor. And so that's why it's important to have a bit of gold, a bit of silver, a bit of precious metals, 5 to 10% in your portfolio, just as a protection, insurance against all of that stupidity. And a bit of Bitcoin as well. I mean, as you know, I have Bitcoin, even though it's bull and bear, I always have a portion of the portfolio in Bitcoin, whether it's bull or bear, but that's a minor portion. The bigger portion, we're playing trend. We're early in the bull trend, then we're out on the bear. And then you have approximately 5-10% of your portfolio being the insurance against the whole system redefining itself, collapsing, hyperinflating, this and that. Because it can happen. But if you have 10% of your portfolio in those assets, the value is going to flow into. So they're basically going to protect most of your portfolio in case of a catastrophic collapse or whatever is going to happen. The mistake most people make is that they think that the hyperinflation is going to happen today. Or tomorrow. So go all in gold, right at the peak, because that's where they heard that hyperinflation is coming, and now gold is down 20%. They buy silver at $120. Now silver went to $60. They lost 50%. And so they protected against 2% inflation in the dollar, or 5%, depending on how you measure. And instead they lost 50% in silver. Fantastic. You don't want to be that yet. You don't want to be in that position. So Let's see what's gonna happen with the war. Just some more news here. U.S. sailors and Marines aboard USS Tripoli ready for assault, amphibious assault. U.S. reportedly planning ground invasion of up to 2 months. Okay, that came out yesterday. But also, yesterday came out that J.D. Vance hoped that operation against Iran does not last more than 2 years. So it's 2 months or 2 years. Which one is it? 2 months? Because it's a big difference. It's a big difference. You have this picture. Now tell them the war will last 1 to 2 years. So it started with no war, just boop, 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 a few strikes. Then we need to maybe have 2 weeks just to calm it down. Now it's been a month soon. So now they're speaking maybe 2 months. And also, by the way, maybe 2 years, but hopefully less. Hopefully less. I've seen it before, man. It's like Russia tried overnight to capture Ukraine. I've seen it before. It's crazy how things repeat quite exact. You look at Russian television, what they've been saying about Ukraine is going to be, well, 72 hours to capture the whole thing. It took a bit longer. It's a year, how many years? Man, 4 years, over 4 years. Holy crap. Yeah, that life. And so if you consider the Iran situation, it can also easily be 4, 6 years. That sounds insane, but I mean, Ukraine was the same. It should have been, fast 72 hours, get in, get out, done deal. You for weeks there fighting for 1 centimeter back and forth. Iran, hopefully it's not going to do like that, but I can tell you that it can easily do like that. It can easily do like that. Like these things, once they start, especially with today's warfare, especially how today's warfare is with, artillery, drones. It's just something, you go in with a big army, you take over like the Reichstag, 1945. Don't forget that. Now it's more of this war of attrition. So let's see what's going to happen here. Yeah. Market, in bull market, extreme oversold, real opportunity. In bear market, is business as usual. Very important. So just referring back to the whole situation with fear and greed, we're always at extreme fear. For the past months and months and months, we're at extreme fear. We were here at extreme fear when Bitcoin was 100K, and we're at extreme fear here at 85, and we're at extreme fear here at 65. So that's why this is interesting to look at just for discussion. But just like what Luke is saying, oversold is business as usual. Extreme fear is business as usual in the bear, and it can continue for quite some time. That's why you really need to track the price trend and not just sentiment, because sentiment can be fearful, and you buy the fear, you buy the blood, and it keeps being fearful for another 8 months. Can easily do easily do like that. Later on, I will show you Ray Dalio. First, let me show you someone else. That's Tom Lee, man. I've been missing Tom Lee. I've been missing Tom Lee and his bullshit. He's saying bear market is over.
Sweeper.
He also said that it is gonna go to $62,000 in December. Last December, guys. Not this December. It was last December, the one 4 months ago. Man, I love Tom Lee. Hopefully, it's bull market for real soon. I want to be on Tom Lee's side, man. I want to be on his side, but I cannot guide you into stuff that's not true. I tweeted this now. Remember Tom Lee? Remember it was supposed to hit 62K. And guys, I'm not over exaggerating, because we had a stream on exactly this. We had a stream on exactly this. Let me see where this Ethereum's price. Wait. I don't want to play the whole thing. I just want to. What did you say about? Just fed it a bit. Fed the 50 week. No, you cannot even do that. So, honestly, people are begging. People are hoping. Can we finally get some kind of fun? And Tom Lee is right here telling us, oh yes. Well, what does that mean for Ethereum's price? Because this is from December. This is from not even early. This is from October or November or something like that. So I think Bitcoin's going to get to 250,000 within a few months. Okay. So Bitcoin should have gone to this is not from the last week or day. This is from October. So he said Bitcoin 250 in a few months, December, January. Oh, within a few months, Bitcoin 250. Okay, that's number one. Number one step in his reasoning. Next, and if Ethereum price ratio to Bitcoin gets back to its 8-year average, that's $12,000 for Ethereum. I mean, that's a huge move. If it can, so 12K is if it gets to the average, but you have a bigger prediction
Gets to
here.
the 2021 high. That's $22,000 for Ethereum. But I think Ethereum is going to become the future of finance, the pain and grails of the future. And if it gets to 0.25 relative to Bitcoin, that's 62,000. So I think
So anyway, obviously it don't happen. Okay. Sometimes you make prediction, you're a bit too bullish, and it's fine by the way to make too bullish prediction. But man, you have to change your mind. Like if the world goes against you, the reality goes against your prediction. You have to be this quick to change your mind. That's why since October we're bear. Before October, in September, you remember in August last year, we were bull. But in October, book, we're bear. We will get a change. We're gonna cut the crap. But anyway, so now he's back with another prediction. And that's that. The bear market, guys, it is over. Let's go, Tom Lee.
how much longer do you think we're going to be in this winter for? I think the crypto winter is going to, it's either ended already or it's going to, the latest is April. So I think we're almost through the winter. Love that. Well, I hope you're right, Tom. When spring comes, crypto spring comes, right? It's crypto spring, and then hopefully we'll have a great.
No, I mean, Tom Lee, I love Tom Lee. He's such a nice guy. I mean, look at his haircut. Look at, he's so cute.
How long do you think we're going to be
I mean, all Koreans are
in this
cute.
winter for? I
Well, look at him. Look at him. He got the new hair.
think the crypto winter is going to, it's either ended already or it's going to, the latest is April. So
I love it. Anyway, hopefully he's right, guys. I mean, hopefully he's right. I mean, I don't want to be bear either, but I just look at the chart. I tell you what I see, but I would love for the bull to return. I don't think it's going to return yet. It's going to return later this year, Q3, Q4. I don't think we're through it yet, but soon. Okay, it's not that far away. And guys, as you know, we've been navigating this market quite well. How? Because of mechanical rules, because of the system. And yes, guys, it's time for us to launch the book. It is currently ready to buy. If you go to bullmania.com/book, let's actually put it now in the description. I forgot to add it to the description. Bullmania.com/book. It is right there, ready for action. Get the book. I'm gonna put it. Get the book. Bullmania.com/book. There you go. And as you know, it's all about big profits. The book is called the Big Profits. The game is rigged. How to win anyway. It's all about my strategy. The book really starts like a thriller. I explained to you my biggest flaw in crypto, how it happened, and it's almost 10 million. How it happened, how I made it back, like everything. And then, of course, explaining the full methodology, how you apply the lessons and the system in your own trade. Everything from what to buy, because you shouldn't buy everything. Most people, they have a favorite asset, they try to buy it, even when it doesn't make sense to buy it. You have your favorite one. Then, what to buy, how to buy it. Most people, they see something that they want to buy, they go all in, or they then go all out. You understand how to buy, what to buy, how to manage the position, how to exit position, and so much more in this book right now. So we do have a deal with the early OGs that buy basically now, and that means that you get it at cost, so the price is at cost, and also you will get the PDF included, and also you will get a call with our team, implementation session. So basically, if you want to discuss the book, you want to apply it in your trading, because the last thing I want is that you get the book and then what happens? Nothing happens. You find it very interesting. People also have such an interesting book, a very interesting book. Everyone who says who sees the book, that's such a great book. Okay, but what's next? You need to apply. Most people read any book, whether it's business book, health book, anything, and then they say it's very interesting, fantastic, and they put it on the bookshelf, they never touch it or do anything. So I'm only sure that you implement. So that's why we offer the implementation sessions. Anyway, bullmania.com/book, that's number one. And number two, you go to bullmania.com/partner, which is also in the description. You get fantastic deals for our exchanges that we partner with. And all of them, we have negotiated prices for our audience. So, for example, the fees, but also the sign-up bonuses. So you go to bullmania.com/partners in the description. You can sign up for buying, for example. You can trade crypto, precious metals, stocks, go long or short, fantastic fee, low fee, fantastic low fee, and nice sign-up bonus. You can read more right here. Firenex for the bots, weeks is like a low KYC Bybit, and other ones you can read right here. So that as well. And on this note, let's go to Q&A. Questions, answers, debates, discussions as soon as possible. I need to give a big shout out also to Hyperliquid, because Hyperliquid is holding up like a champ. We've been following Hyperliquid in the last book, it's been fantastic, but in the bear, even though it did enter a bear trend, let's see if it's still in bear trend or it's in, or I think it now is in a bull trend since a few weeks back. Let me see here. Yeah, so here it's in the bull trend. But still, you want to avoid that trend. And here, trade just short term. Trade just short term. But overall, it has outperformed Bitcoin a lot. It has not outperformed just being outside of the market, but it. also, yes, Nakamoto, you have to be careful. With treasury company, you have to be super careful. If your Nakamoto Bitcoin treasury crashes 99.34% from its peak, okay, how can you crash that much if you're a Bitcoin treasury company? This is why I don't like any treasury company, guys. I've been saying to you for a long time. I'm not interested in MicroStrategy or this or that or anything. I'm not interested because you see the problem. Somehow they managed to screw up a company which just buys Bitcoin and should be worth like the Bitcoin price and should kind of follow the Bitcoin price, okay? And yet you crash, okay, you don't crash a bit, you crash 99 point, like how is possible? How is possible? Obviously, there is a bit of speculative aspect to it, meaning that a treasury company can run way more than Bitcoin because it's a bit of speculation. So you could have more volatility in it. But to have 99, you crash 99%, how? Not how, I don't know. Because it should get like Nobel prize in economics for crashing this number. How is possible? It's quite insane. Anyway, before the Q&A, while we're thinking about questions, let me just tell you this right now, where he does speak about the A bubble, whether we have the A bubble fall, yes or no, because now they have been going down a lot, and IGV, like, and those sorts of things.
If the bubble is at this 80% range on your index or metric, there are folks who have Walter Jones coming in here a couple weeks ago. He said, look, I think we're in October of 1999. By the way, Mark, we still have 40% to go. Back in 1928, Charles Merrill, who founded Merrill Lynch, told everybody get out of the market because he thought it was a bubble. And he was right and he was wrong. Insofar as from the beginning of 1928 to September of 1929, stock market went up 90%. And so,
but I think when you're looking at it, you're looking at it incorrectly. Okay, what is a bubble is the definition. Like, I want to reiterate, a lot can go up before that's the bubble goes. A bubble is an unsustained set of circumstances. It has unsustained amount of buying, right, and has an unsustained amount of valuation. It has, and then there's something that trips the bubble.
Is there a way to sustain this?
You can't look at, don't sell just because there's a bubble. Okay, don't sell just because of bubble.
I mean, it's almost like Ray Dalio is speaking a bit about mechanical bullshit because the issue you were asking that you never, like, how do you know when it's time to sell? Because he had this Merrill Lynch example where the guy said it's time to sell back in 2008, and then it kept pumping anyway, 90% up. It's true. You don't know those numbers. You just have to know where the trend is against it.
But if you look at the correlations with the next 10 years returns, when you are in that territory, you get very low returns.
JP Morgan just did a report on this that showed that if you got in at over a 23 PE multiple, typically over a 10-year period, your return is a delta between 2% and minus 2% a year over 10 years.
Yeah, so your point. I just put out today a post on this, and you'll see the charts and if you go on that. So I think that you have to say it's unsustainable. Then you have to go to the timing. What is it that pricks the bubble, right? Typically, a technical monetary policy, we're not going to have that now, right? But you could have something. In other words, the need for cash, right? The need for cash is always that which pricks the bubble. Because when you have wealth, you can't spend wealth. Right? You have to sell wealth in order to get the money to buy the things you need or pay the bills you have. That's the number. So I think that the picture is pretty clear in that we are in that territory of a bubble. We are in that bubble territory, but we don't have the pricking of the bubble yet.
So AI, big fat bubble, but we don't have pricking of the bubble yet. And how do you know it? Well, the trend. That's right. That's right. Guys, let's go to Q&A. Questions after debates. Let's go, guys, as soon as possible. Big shout out to Matt. Matt is moderating. Guzman and Dab, not here today. Hopefully back tomorrow. Let's go to Q&A. In fact, I'm just going to ask, what is looking at his eye? Well, Andrew Swarton, what happened to his eye? Let me put it here. The big profit right here. Well, what happened, guys? What happened? Thanos? So when everyone clicks bull, we buy Bitcoin, after all. Yeah, I mean, should Bitcoin click bull? It's time to bull. Sure. And anything that click bull is time to bull. But especially because if Bitcoin is bull, it means that everything else can be in a prolonged big fat bull, okay? Now, for example, hyperliquid current bull, you can trade it short term, but you just have to be super careful. As soon as it's there, you have to be out because Bitcoin is still there. And yes, April is in 2 days. New months. Let's actually see seasonality. Bitcoin seasonality. Seasonal return for BTC. Because is April a good month or bad month on average? On average, quite okay. The problem is, if you look at the midterm, not too okay. So let's see, 2022, we have minus 15%. 2018, this was quite good. And then 2013, I don't know how much. This is the trade on this. It's not bad. I know people love looking at the seasonality. What's going to happen in April? It's going to be red. It's going to be green. It's going to be blue. Yeah, it's like you can be a monkey there. You can choose green, red. You can, it's like 50-50. People put too much. Yes, this month to month, you get on the dollar trend. That's down. But yeah, if you look at this one, so April 2025 was green, red, green, red, red, green, 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 green. So a bit more green. Hopefully, we're gonna get a bit of a bullish, but yeah, not the time yet to look for bullish things. When the bull trend is there, you can make anything bullish. All news is gonna be in a bullish way. When the trend is bear up, man, even the proper bull moves don't pound. Even the proper bull moves. So it's like what Lucas said, extreme almost all the business. That's what we're
Quick.
do you think Dow can go below 100? Let's see. Dow. This thing can. Okay, below 100. I mean, nothing is impossible, but it's. I wouldn't count on it going to 100. Why? Because it does. I mean, the all-time low here was super high before.
One,
It
two,
closed
three,
it
four, five, six.
at 160. Let's see if there's a longer chart. Let's find the longer.
Check the course damage.
I mean,
Oh,
anything's possible. Definitely go
no
below.
pop.
At
Damn,
160 as possible. I mean, it has to-
Shit.
You want the long shot. Maybe finance this shit. I don't know. So what can we say? Dow is now in a new trend. That's number one. So it's good. You can trade short term, but it's getting hammered by the 50 week. Yeah, let's see for how long it continues in the bull. But yeah, overall, it has a lot of support at around 180.
Oh,
It's
yeah.
not gonna be.
I think it was
I think
dead.
there's
I
a
was
clear chance
supposed to be like,
compared to the Dow goes to 100. Because that would be like, that's quite a long. The only thing that would change my mind is if there's another chart where Dow has been on 100 before, but I haven't seen. So if this is the full Dow chart and there is no trading at the like here at the 60s and then that, like should look like this. If the chart is like this, then it's more like if the chart has never been at 100, it's like Dow B is which one? Combined? But let me see this one. Okay. This changes. This actually changes. This actually changes. Thanks for clarifying. Yeah, it happened a lot. Should you come here, prepare your donut for action? Yeah, it changed. It has been here. It has support here at approximately 84. Yeah. Still more chance that Solana goes to 30 though. Because Solana is a bit further. Like Solana now is here. It's here right before the flush. Dow is still right here and in a bull up. Yeah, for now, this is not a shorting. I wouldn't short this now. I would short it here. If it goes to 160 and he wants to break down, here you have a nice short opportunity or a nice 50% short. Okay. No, it can easily go to 100. If it takes another leg down, the bull trend is super small, just gets cancelled out, and then you can have fantastic short term. But everything like here, I would say it's not too interesting because you have been chopping sideways. So whether you're long or short, like on this level, it's gonna be too choppy. Should start going below here, you have a nice elevator here. No chop, no previous levels is the best. So if you want to make it easy for yourself, just like we made it easy for ourselves by shorting Google, Richard, it's fantastic. We were thinking about for weeks and weeks and weeks, but you have Bertrand, you have not a lot of support for anything in this week. It's like Mona Lisa. And it starts to break down. And this is what I mean by the way, like some charts, they're just not easy to trade. So you don't have to put yourself into a chart, which is not easy. Let's see, for example, Apple is a good example. Like, I wouldn't touch it because it's not super bullish, it's not super bearish, it's like, nah. But people want Apple. I know, I don't trade Apple. Or maybe Tesla is a better example. People only want to trade Tesla. They don't love Tesla. Now, to be fair, Tesla reached this week, retested it, and now you can short it from the week. But here's an example where you want to make it easier. Don't trade charts which are not easy. Google, super easy. And yeah, should Dow basically go to that lower bound? Fantastic. Are we all thinking that Iran lost Trump midterm, or is it all part of his plan, or can he bring back the S&P? Yeah, can he bring back the S&P? He can. If he stops and then comes to the setting. If he stops and starts speaking about the golden age, the rate cut, the peace, this is basically what Trump did before he became president, and what he did in the early months. You need low rate, you need the low tax, you need the tax cap, you need all these things that were supposed to be his program. Now I don't know. It's different. So he can definitely pump it back so high, but I don't think he will because his cojones, his nutsack is a bit stuck. So you should figure it out. Let's see if he can figure it out. Well, let's see. Will buying MicroStrategy outperform buying Bitcoin directly in the buy zone, say 55, 65? Well, you can just instead of doing that, you can use small leverage instead. I like it way more than buying stock that is supposed to be Bitcoin. I mean, theoretically you can do it, but you have Michael Saylor and he's issuing debt. He's trying to get you to buy his 11% guaranteed dividend and so on. So why do that? You buy a business risk. By the way, look at what did it say? Break down from the 10-week retest and no more for MicroStrategy. So I'm not a fan of that. I would rather, if you want more upside, you can use leverage, whether it's Bybit, you can get all of the low fee, everything, the samples, you go to bullion.com/partners in the description. Because there you have full control. I mean, you understand what Bitcoin is.
We've gotten over 700 leads.
Right.
Many of them are now active. And so just go treasury.gov and it's right there prominently on the website, and we can pay up to a 30% reward for the recovered funds.
Nice. Lastly, it's people.
They come to the Treasury website. We've gotten over 700 leads.
Right.
Many of them are now active, and so just go treasury.gov, and it's right there prominently on the website, and we can pay up to a 30% reward for the recovered funds.
Nice. Lastly, it's people.
They come to the Treasury website. We've gotten over 700 leads.
Right.
Many of them are now active, and so just go treasury.gov, and it's right there prominently on the website, and we can pay up to a 30% reward for the recovered funds.
Nice. Lastly, it's people.
They come to the Treasury website. We've gotten over 700 leads.
Right.
Many of them are now active, and so just go treasury.gov, and it's right there prominently on the website, and we can pay up to a 30% reward for the recovered funds.
Nice. Lastly, it's people.
They come to the Treasury website. We've gotten over 700 leads.
Right.
Many of them are now active, and so just go treasury.gov, and it's right there prominently on the website, and we can pay up to a 30% reward for the recovered funds.
Nice. Lastly, it's people.
They come to the Treasury website. We've gotten over 700 leads.
Right.
Many of them are now active, and so just go treasury.gov, and it's right there prominently on the website, and we can pay up to a 30% reward for the recovered funds.
Nice. Lastly, it's people.
They come to the Treasury website. We've gotten over 700 leads.
Right.
Many of them are now active, and so just go treasury.gov, and it's right there prominently on the website, and we can pay up to a 30% reward for the recovered funds.
Nice. Lastly, it's people.
They come to the Treasury website. We've gotten over 700 leads.
Right.
Many of them are now active, and so just go treasury.gov, and it's right there prominently on the website, and we can pay up to a 30% reward for the recovered funds.
Nice. Lastly, it's people.
They come to the Treasury website. We've gotten over 700 leads.
Right.
Many of them are now active, and so just go treasury.gov, and it's right there prominently on the website, and we can pay up to a 30% reward for the recovered funds.
Nice. Lastly, it's people.
They come to the Treasury website. We've gotten over 700 leads.
Right.
Many of them are now active, and so just go treasury.gov, and it's right there prominently on the website, and we can pay up to a 30% reward for the recovered funds.
Nice. Lastly, it's people.
They come to the Treasury website. We've gotten over 700 leads.
Right.
Many of them are now active, and so just go treasury.gov, and it's right there prominently on the website, and we can pay up to a 30% reward for the recovered funds.
Nice. Lastly, it's people.
They come to the Treasury website. We've gotten over 700 leads.
Right.
Many of them are now active, and so just go treasury.gov, and it's right there prominently on the website, and
Oh, that was a good 45. Time to work.